welcome everybody. Thank you for joining us. I appreciate you being here, and we are going to talk about the stock that everybody wishes they owned for whether it's years or even just months or weeks. We're going to talk about NVIDIA and the news about the stock split coming up, 10-for-1 stock split. What typically happens to a stock? How does it affect how it trades? How does it affect the value of the stock? So on and so forth. So first off, let's just get down to the basic numbers. The basic numbers is there's no difference in the value of the company. There will be no difference in the value of your position, whether you own stock, whether you own options. So for example, NVIDIA today closed at $1,100. We're going to round this off. Okay? So you got $1,100 stock. Let's say you owned 100 shares of NVIDIA. And if you owned 100 shares at 1,100, that's really awesome. So you've got a value then of $110,000. Okay, $110,000. Well, what happens on the stock split? What happens 10-for-1 in this case? Ordinarily, we see stock splits 2-for-1, 3-for-1, 10-for-1. This 1,100 becomes 110. Okay? However, your 100 shares becomes 1,000 shares. 1,000 times 110, you still have a value of $110,000. So the value of your investment, your holdings, hasn't changed. Now, let's look at it from the option side of things. Okay, let's go out to regular June expiration, since the split is occurring. Last trading day of the $1,100-ish stock is June 7th. So June 10th, that Monday, everything will be on the 10-for-1 split. Let's say you own one 1,100 strike call. Okay, here's the 1,100, closed today at $56. Okay, what is the value of that today? What is the value? Well, we know we'd have to multiply everything by 100, right, to get the notional value, $5,600. Okay, what'll happen is if you have that position on the last pre-split day on the 7th, on the 10th, you will now own 10 of the 1,100 divided by 10, 110 strike calls at a value of $5.60 each. Again, $56 divided by 10. So if we take 10 times 110 times 560, your value is still $5,600. So when you talk about the stock split, there's no difference, again, in the value of the company and the value of your position. Now, there has to be a reason a company splits, and there has to be some effect on the marketplace. And there typically is. Historically, and I've been through just gobs of stock splits, both trading on the floor and trading on the screens with you guys, what typically will happen is we will see a run-up, not necessarily just in stock price, but in the implied volatility of the options. And we can see that has already started to happen here. The split was announced right here. We're starting to see that tick up already. I wouldn't be surprised if we see NVIDIA really reach maybe a 50, low 50s implied volatility before the split. Why is that? Well, just as people may want to rush into the stock, right? So there's buyers of the stock. People want to buy the options also. What happens? Supply and demand. If there's a rush for people buying things, if there's demand, it pushes implied volatility up. So I would not be surprised to see that happen prior to the split. After the split, that's the important thing. What happens? Okay? Well, if you think of NVIDIA right now, NVIDIA currently has 2.5 billion outstanding shares. Same math. Okay? It's 10-for-1 split. NVIDIA is now going to have, on the 10th, 25 billion shares of stock. How do you think that is going to affect the way the stock trades on a daily basis? Well, markets are going to get tighter because you're talking about a $100 stock instead of an $1,100 stock. Plus, the fact that there's 25 billion shares of stock, it's going to take a lot more to move that stock. So typically what we see after a split is just how that implied vol kind of ratcheted up a little bit going into the split. It starts to contract back. So from an implied vol standpoint, the week or so, few days, the week or so after the split, I would expect implied vol to come back down kind of to where it is trading right now, maybe even a little bit less, right around 40%. Not as drastic of a change in implied vol as we might see after an earnings report when we see a vol crush, but there would be a vol decrease. Now, how do you play that? If you're trading options, how do you play that? Well, number one, you have to decide whether you want to be bullish or bearish directionally. Okay, personally, I think there's still going to be a run up in the stock into the split, and then right before the split, maybe on the 6th or the 7th, that Thursday or Friday, we might see some selling, kind of a buy the rumor, sell the news type of event. But regardless of how you want to be positioned in NVIDIA for the post-split shares, whether you want to be long delta, short delta, neutral, whatever it is, I would do this, and I would want to have a short Vega position, a short volatility position, because I would be looking at that vol coming back down, normalizing after the split. So one way you could do that is by selling spreads, selling an iron condor, selling a call spread, a put spread, depending on what you're thinking directionally. Selling calendar spreads are ideal for this. The problem with selling a calendar spread, what do I mean by that, is let's say maybe you buy the 1,000 strike put on the 14th expiration, so that is 1 week post split, and you sell the 1,000 strike put 1 week later, the 21st. Well, that's selling volatility, that's selling Vega, because the further out the options are, the higher the Vega, the higher the vol component there is. And if we break this down, this is that position here, we can see the Vega difference there, negative 54, okay? Now, the problem with selling time spreads or selling calendar spreads is you do need excess margin for it, because the way that your brokerage firm, your clearing firm is going to look at that is that what is your position potentially going to be after the short option, after the closer dated option, which is your June 14th long, okay? What is your position going to be? They look at that like you may have a naked option. So you do have to put up more margin for that. That is one way of getting short vol. Another way that I love, again, is selling an iron condor, selling call spread, selling put spread. You can always do a 1x3x2 kind of broken wing fly where you're selling 3 of the middle. That'll get you short a little bit of volatility, but depending on how you want to be positioned, guys, it's like Heinz ketchup, 57 varieties. There's always a different way you can get to what you want to have trading options. So that's kind of a preview and a summary of what you can expect with the NVIDIA split, guys. We'll see how it all plays out. Really appreciate you being here and can't wait to talk to you on the next one. Bye-bye.